Good evening to you. Warm welcome to Prime Business with me, Pius Kojo Baka. The Ghana National Chamber of Commerce and Industry is asking the Bank of Ghana to consider reducing the policy rate at their next Monetary Policy Committee meeting following the significant drop in inflation for the month of December 2023. Government ended the year 2023 with an inflation rate of 23.3%, following or below its revised target of 31.3%. Reacting to this development, CEO of the Ghana National Chamber of Commerce and Industry, Mark Bedua-Boaji, said the recent drop in inflation is enough justification for a review in the policy rate.
I don't see any reason why the central bank should keep the policy rate at 30%. One of them, the main reason they gave for increasing the policy rate was to tame inflation and bring inflation down. So consistently, they've been telling us that consistently they've been increasing inflation. Even when at the point where inflation was trending downwards, they were still increasing the policy rate. Now we've gotten to a level where from the beginning of the year to now, we've seen a 30.4 reduction in inflation. So there is no justification for a central bank to keep the policy rate at 30%. Recent data indicate that our interest rate is the highest in the whole Africa. Just interest rate are the other cost of production. And you know how the difficulty is. So it is time that they step back. We appreciate that to some extent.
Meanwhile, Associate Professor of Finance at Andrews University in the USA, Williams Pipra, says this would positively impact on the prices of goods. He, however, says this does not mean the economy has recovered.
Understand the basic definition of inflation, which measures how more expensive a set of goods or services has become over a certain period, usually a year. So the December figure gives us that perspective, 23.2%. So the rate of increase, comparing last year, that is 2022 and 2023, we've seen the rate of increase has declined to the 23.2%. This is a positive, or let me put it, a favorable news. It means that prices are moving up, but they are not moving up drastically as they were in 2022. So this December figure, as I've mentioned, is a favorable figure, especially if you compare that one to what the budget anticipated that would be the figure of 31.3. In effect, it does not mean that things are okay in Ghana, but just that the rate of growth in prices, goods and services, has really reduced significantly from December 2022 to December 2023.
Away from inflation-related stories, as the Ghana Revenue Authority readies itself to implement the signed 5 tax amendment bills into law, tax analyst Francis Timoboy is urging the authority to embark on an intensive education on the new amendment bills assented to by President Akufo-Addo in order to get the buy-in of businesses. Although the authority had said it will be guided by the completion of the necessary public education, Mr. Timoboy maintains consistent engagement with the businesses on the amendment bills will countenance any challenges during implementation. He spoke to Joy Business.
I see the GRA doing is that some of those implementation that has not been done before, that is what we are seeing now. So some of them are not really new laws. Some of them, for example, the VAT on the electricity. Since 1998, we've had the lifeline consumers being exempted. If you consume above the lifeline, that is where you pay VAT on it. So currently we pay VAT on those ones. But I think the implementation is what went, on the low line. Now they want to fully implement some of those things. But otherwise, some of them are not new. And the Constitution does not allow the Parliament to pass a law that would take retrospective effect. We have observed some trend in the recent tax laws that are being passed. Normally, when a tax law is passed, either Parliament will tell us the effective date. Of late, we are not told, so we go by the date of Gazette or maybe when the President signs it. And if you've taken a close look at it, the President signs it on 31st December, and it's expected to take effect on 1st January when everybody is on holiday. So if you're a business person, you find it's really, really difficult to comply. And so what the GRA has been doing to step in is to come out with a publication that these taxes are going to, start on this date. And so since the Commissioner General has said it, today is on the 9th of January. We've not seen any publication yet. We will kindly call on the GRA as a matter of urgency to tell the public so that businesses will be able to comply.
Partner Accounting and Advisory Services at KPMG Randolph Ano is entreating businesses to employ the use of technology, drafting their financial plans to improve efficiency. According to him, businesses that thrive and grow rapidly have an effective financial plan that guides their expenditure and activities. Speaking earlier on the marketplace, Mr. Ano said the use of technology in preparing a business financial plan is crucial to enhance the company's competitiveness.
Financial planning, right, is linked to performance. And there's a lot of research and study that has shown that businesses that undertake financial planning perform better than those that do not. So if you really want to do well, one of the things you ought to be doing is focus on financial planning. You see, the thing is that if you don't have a plan, how do you know whether you are doing well or not? And especially in our space where we have a lot of SMEs, in Ghana, about 85% more of the businesses are SMEs.
That's right.
Sometimes you're a business and you're telling yourself you are doing well. What is the benchmark? What are you using to say you are doing well or not? With a financial plan, you have something clearly defined, and so you know whether you are on track or you are not on track. And so it enhances business performance, and also it enables you to take good decisions. Financial planning enables businesses to take effective business decisions. If you don't have that, you may just jump at anything and reduces your efficiency and your decision making. So I'll just state these two.
I mean, you use the word effective, which I think is important for what we are discussing.
Sure.
And so how can businesses come up with effective financial plan, especially during these times?
Sure. Thanks, Darryl. So, and I like how you frame it, effective financial planning. A plan itself is useless, okay? So for effective financial planning, there is a cycle, right? First, as a business, you need to understand where you are. What is your current state? Where are you now? What is the environment you're operating in? What is the environment you're operating in internally and then externally? So you need to know your current state. That is first. Then second, after you have assessed this current state, you now determine what key targets or what objectives you want to achieve. These key targets and objectives must align with your strategic objectives. A lot of businesses will have their mission, their vision, and all of that. These things are very long-term things, right? So whatever it is that you're doing or whatever target you are setting must help you to realize those missions and those visions. So you set your key target. Then you define your action plan, which is the financial plan, all right, to help you to achieve those targets. It doesn't end there. I said earlier that just having the plan doesn't say much, but the implementation. So you need to implement. If you have a plan and you don't implement it, it's useless.
Ghana's food basket will increase by 189,000 tons annually for the next 4 years. This is expected outcome of the Harnessing Agricultural Productivity and Prosperity for Youth program being implemented by the MasterCard Foundation in partnership with Agri-Impact Limited, an agribusiness consultancy firm. Now, the program will focus on rice, soya, tomatoes, and poultry value chains while in providing 260,000 jobs. Now, Dan Akwe is Chief Executive Officer of Agri-Impact Limited.
Focusing on 4 agricultural value chains: rice, soya, tomatoes, and poultry. These 4 value chains should be able to create the number of jobs that we are looking for, the 326,000 jobs that we are looking for. And we are also not limiting ourselves into specific locations. For now, we will be starting with 10 regions, but we will be extending to all regions in the country. The program is designed such that we are going to use implementing partners. And these implementing partners are coming on board with some level of resources and expertise. The National Service Scheme is coming out with over 20,000 acres of land and will be onboarding about 90,000 young people onto the program. Then we have New Age, which is a private firm. They are also coming onto the program. They will be doing over 20,000 hectares of land and will also be focusing on more than 140,000 youth. We have TechnoServe also participating, and they will be focusing on private sector support and development. Then MIDA, which is implementing the Ghana Cares Obatampa program, is also coming on board with about 6,000 acres of land and over 2,500 or so jobs, more than 2,500 jobs to be created. Then we have Jobaman, the Catholic Relief Services, which is also a key partner operating mostly in northern Ghana, will be targeting a lot of the informal youth. And then beside these ones, we also have our Ministry of Agriculture. Of course, we cannot do this program without Ministry of Agriculture. So Agric is providing all the technical support for all the crops, as well as the poultry that will be rolling out.
And that's all for Prime Business. I am Pius Kujubaka. For more stories, do log on to myjoyonline.com/business. Prime Sports is next.